Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking $8 stock versus $800 stock, guys. I'm basically tapping into the whole trend on YouTube right now that's going like, have you guys seen the videos like $10 steak versus $1,000 steak, or like $10 pizza versus $1 pizza, or things like that? I'm trying to tap into that, just do something fun that plays around with that, but something that's very useful to my subscriber base, which is basically what we're looking at today. Is we're looking at Amazon stock back when Amazon was a little company, back in 2001. We're going to go through some things with Amazon back then versus Amazon now, and why Amazon has risen so much, and why, and we're going to look at some fundamentals on some things behind things that basically will help you. I believe it will help you identify some of these stocks in the future, because there's some stocks trading right now that are these $8, $10, $12 stocks, right? And they're going to go up 10,000% in the next 15 years like this one has. There's going to be a few of those out there, guys. And the trick is to let's identify those in the future and try to find those stocks that are just, smaller companies right now that aren't really thought about as being a giant or anything, but that may grow into it. What are some of the factors that we saw with Amazon that maybe can be applied to this stock or this stock in a different industry, guys? So that's exactly what we're looking at. So here with Amazon today, August 1st, 2001, Amazon was $8.94 a share. As of doing this video now, which is 2017, 15 and a half years later, Amazon is $894 per share. For those of you guys who do not know, that's a 10,000% gain. 10,000%. So that's just an absolutely stunning gain. 10,000%. Imagine that, guys. I wish back then I would have bought, I think I had like $200 saved up. I was probably 12 or 13 years old. I should have just stuck it in Amazon stock. Amazon's not the only one that's up 10,000+% since 2001, by the way. There's several stocks. A couple others that come to mind is Apple. I know Apple's up way over 10,000% since 2001. And then Monster Energy, that's another one that's up, I think, like 30, maybe 40,000%, maybe even 50,000% since 2001. So there's a few stocks that are just monster companies now, no pun intended, that are just beasts now, guys. So let's look at this Amazon. Let's see what they had going on back in 2001 that maybe if we were around back then investing, maybe we should have checked this one out. So Amazon, this is from their 2001 annual report we're looking at here. So they're talking about basically sales grew 13% from $2.76 billion in 2000 to $3.12 billion in 2001. They also achieved their first billion-dollar quarter back then and re-accelerated sales in Q4. They served 25 million customer accounts, so a lot of people even back then in 2001 compared to 20 million in 2000 and 14 million in 1999. Listen to this, international sales grew 74% in 2001. 74%, absolutely huge there, guys. So, and then they talk about some other things that we were doing with small businesses, inventory, a lot of different things there. Very impressive here so far. So, and then they talk about here, they're obsessive over customers. Our commitment continues. Until July, Amazon.com had primarily built on two pillars of customer experience, selection, and convenience. In July, as I already discussed, we added a third customer pillar, which is relentless lowering of prices. You should know that our commitment to our first two pillars remains strong as ever. Listen to this also. We now have more than 45,000 items in our electronics store, about 7 times the selection you're likely to find in your big box electronics store, which was basically like Best Buy and Circuit City. We've tripled our kitchen selection. You'll find all the best brands. We've launched computer magazines, blah, blah, blah. The biggest thing I take from that is back then in 2001, they already had a selection of electronics that was 7 times bigger than the store. That's huge, guys. That's absolutely huge. They were already building on not just being a book service anymore, which is what they kind of their niche that they were first known for, right? It was book sales. And then remember the whole thing about them putting bookstores out of business and all that. That was their first kind of trend. And then the next one was electronics and taking over electronics industry. So right back then, if I was looking at this, I see a company that's relentlessly lowering prices. So they're going to have a pricing competitive edge over all the other companies, right? And I also saw a company that's going to have a bigger selection than anybody else. And if they did that in electronics, then they're probably going to do that in kitchen like they were talking about. They're probably going to do it in this industry, that industry, and this could just go into a giant. So if I was looking at that back then, that's some of the things I would have saw that would have got me really excited as far as Amazon went. Because in retail, it's all about price. It's all about selection. All about price and all about selection in retail. It's the two most important things over everything. Customer service is probably next best after that. But when you have a lower price and you're got a good selection and it's easy, then that's pretty damn good customer service in itself right there. So this is another huge thing technology-wise they were doing back then. We built a new feature called Look Inside the Book. Customers can view large, high-resolution images not only of the front cover of a book, but also the back cover, index, table of contents, and a reasonable sample inside the pages. They can look inside the book before making a buying decision. It's available on over 200,000 of our million titles. At a point in comparison, typical book superstores carry around 100,000 titles. So once again, they have way more books than a super bookstore, Barnes & Noble or one of those had at the time. And then that feature was so vital because one of the reasons that people would still go to bookstores at that time was because they wanted to open a book and actually read some of it before they actually bought it, correct? Well, this new feature Amazon had, you didn't need to go to a store. You could see right there online and see, the first few pages of it, read it, some of it, see if you like it. And then if you like it, you can go ahead and buy it at that point in time. Huge feature, great technology for back then, 2001, and so vital, guys, just so vital. Now, let's look at some more stuff here. We got an investment framework. So in every annual letter, including this one, which was 2001, we attach a copy of our original 1997, which is when they went public, letter to the shareholders to help investors decide if Amazon.com is the right kind of investment for them and help determine if we have remained true to our original goals and values. I should look at their 2016 annual report and see if they still put this in there. In that 1997 letter, we wrote, when focused to choose between optimizing the appearance of our GAAP accounting and maximizing the present value of future cash flows, we'll take cash flows. Why focus on cash flows? Because a share of stock is a share of a company's future cash flows. And as a result, cash flows more than any other single variable seem to do the best job of explaining a company's stock price over the long term. So I kind of agree and I kind of disagree. I mean, I don't think your cash flow is the most important things. I think a lot of other things go into making an investment decision, right? But at the same time, I definitely understand the vision that they had back then. Jeff Bezos and the management team, basically their vision was, we're not going to focus on trying to be profitable. We're not going to focus on trying to report that we made $10 billion in profit last year. They're not trying to do that. They're trying to expand the business, expand the cash flows to keep expanding the business and just slowly take over industry, slowly put this one out of business, so on and so forth, and keep that going rather than trying to, report a great profit number, which brings me to modern day real quick. We'll just go modern day, which is kind of the issue Walmart's having competing with Amazon, because Walmart's in a situation where they need GAAP earnings to look good, or they could lose a massive amount of their investor base, and the amount that the shares will go down would be dramatic. Means a lot of the board of directors would lose their positions. A lot of the executive team would lose their positions, things like that. So they're in a position where Walmart has to kind of keep up this mirage of profits rather than focusing on trying to really compete with Amazon and focus around the cash flows and trying to make Walmart as competitive as possible, even if that means they lose money one year, even if that means they're unprofitable one year. They got to make their 10, 20, 30 billion dollars or whatever it is in profit they make per year to keep their shareholders happy, which will keep their stock price happy. So it's definitely a difference in philosophy, and it's probably one of the main reasons Amazon's winning, and Amazon will win the retail war, and why every single retailer is basically going out of business right now, or struggling, or coming upon hard times. It's so hard to compete with Amazon because of that, literally that focus on philosophy. Literally that can change everything. So next up here, we want to look at basically they're talking about online retail. Our online retail stores offer a broad range of categories of new products to our customers. These products include books, music, DVDs, videos, electronics, computers, camera, photo items, software, video games, cell phones. They were basically selling just about everything, guys. And so that's another thing that probably would have excited me about Amazon, is the fact that This wasn't just a bookstore company. They were expanding into every product. Every single product. You could see it. They were just adding this category, this category, this category, and trying to price it as competitively as possible, if not the cheapest, so they get more customers to come to them. Very smart idea, and just a lot of expansion there. Then they're talking about the third-party sellers. The third-party sellers channel allows us to provide other companies a set of e-commerce service and tools for the sale of goods and services, which not all the retailers had online services back then, or even cared about online services. We have a third-party seller arrangement with ToysRUs.com, Target Corporation, Circuit City, who now is out of business, Borders, who I think is out of business, Waterstones, who the heck knows what that is, Expedia, Hotwire, National Leisure Group, Virgin Wines, so on and so forth. So basically, they were allowing companies to sell on their website. Amazon would take a cut of that, and Amazon would make money in the end on that. It would eat into part of the gross margins that some of those companies would make, which ultimately led to the death of some of them, like Circuit City, Borders, and those kinds of things, guys. So I don't know if those companies should have made the decision to start selling on Amazon, because they just kind of created maybe even a faster death for them. Maybe they thought it was a smart idea. Maybe they just didn't see the vision that Amazon's going to take their business. Like straight up, like maybe they just didn't understand that it's all over. Like Amazon's going to take your business, and if you start dealing with them and selling even more on them, instead of building your own platform, they're going to take you as well. And that's what happened to a lot of them. And painful. So next up here, now this was some a little bit of worry here I would have had at that time. We have accumulated deficit and may incur additional losses. We've incurred significant losses since we began doing business. As of December 31st, 2001, we had an accumulated deficit of $2.86 billion, and our stockholders' equity was a deficit of $1.44 billion. So this is a type of company that I might have just passed on back then because of some of those type of things that, are worrisome for me, the deficits and some of those kinds of things, not the most fun things in the world. But at the same time, they had so much going for them in the future that it's like, should you just, pass on, some of that stuff, the deficit and some of those kinds of things, and just focus on around the future? And that's kind of the thing that's always had been hard for a lot of shareholders, especially value investors, as far as investing in Amazon, because they didn't see the profits there at that time. They just didn't. Now, let's look at how volatile Amazon stock price was. In 2000, right? 2000, Amazon stock price hit $91.50. But then all of a sudden, 2001 came around, it hit $5.97. $5.97. So we could see Amazon was such a volatile stock. I mean, it reminds me of GoPro. That's the only one I can remember that was like $90. The next thing it was $7, $8 a year or two later. It's almost exactly what Amazon was at that point in time. Absolutely incredible. Such a volatile stock, because what you had is you kind of had the tech bubble going on there at the 2000s, right? And then you had a lot of people thinking Amazon was the next great thing, and then all of a sudden, people thinking, oh no, Amazon's maybe not the next great thing, because this next slide we're going to look at, we're going to see a little bit of slowing in sales, and that is why their stock dropped massively. So if we go back to all the way over to 1997, they did $147 million in revenue. The next year, they had parabolic growth to $609 million. The next year, more parabolic growth to $1.6 billion. The next year, a ton more growth to $2.7 billion. And then all of a sudden, from 2000 to 2001, growth slowed substantially, and they only did $3.1 billion in net sales. So we definitely see that Amazon had a situation here where their growth slowed substantially. And every time a company slows growth substantially, their stocks get hammered, because they go from a high-flying stock that can do no wrong, that's just growing revenues at an insane percentage, and everybody's like so thrilled about it. And then when they come down like that, and their growth slows substantially, I mean, they were growing hundreds of percent, they were growing 70%, and then all of a sudden they're growing 20%. And it's like, whoa, that's such a huge slowing. So what is the next year? 10% growth? So some people thought maybe Amazon's growth was done at that point. That's why the stock dropped from $90-something to $5-something, guys, because that is what a lot of investors feared at that time. And we've seen that. Look at any stock that had that type of situation in the market, right? Their stock dropped substantially. Look at a Fitbit. Look at a Twitter, look at a GoPro, look at all these different stocks that their revenues were going up insane, their stocks were just flying super high, and as soon as that growth began to slow, like a freaking rocket ship. It went down and went down and went down, guys. It happens time and time again with these growth companies, and that's why it's very scary to invest in a growth company if it's not somewhat of a value. That's why I prefer growth. That's why I prefer a balance of growth and value, because if you just go straight growth, when that growth slows, you're going to get freaking hammered, guys. Absolutely hammered. So now let's look at this balance sheet. Cash and cash equivalents of $540 million. They had $450 million in marketable securities, which is basically investments. They did have over $2 billion, we see there, of long-term debt. So that's a little worrisome there. But at the same time, they only had basically a ratio of 2-to-1 for debt over cash. So it's certainly not the best balance sheet in the world. It's certainly not the worst balance sheet. It's just like an okay balance sheet. So if I was looking at Amazon right back then, I would have thought this company has a lot of potential, but I also would have thought, is growth going to stall at this company? Or are they going to max out at maybe a $4 or $5 billion number or something like that? So I don't know if I would have actually invested in it. I might not have. I mean, if I was investing back then, I might have just passed it up, especially the fact that they had deficits, some of those kinds of things. They were such a growth stock. But at the same time, knowing me and knowing the way I like to take advantage when companies' stock drops substantially, when I see a stock drop from 90 to 9, then all of a sudden I'm like, maybe this stock has something, and especially when it still has growth at that point. So who knows? We'll never know if I would have actually invested in it. But let's fast forward to today. Where is Amazon? This is crazy. 15 years later, Amazon announced that it will create more than 100,000 new full-time, full-benefit jobs in the U.S. over the next 18 months. That in itself is just miraculous. 18 months, 100,000 full-time, full-benefit jobs in the United States, guys. Who would have thunk it? Who would have thunk it? Let's look at some of these sales numbers they do now. They do $94 billion just in we're looking at all the way the right-hand column, 12 months ended December 31st, $94 billion just in product sales, another $41 billion in service sales, $135 billion in total sales versus back then they were doing $3 billion. You look at just the product sales for the last 3 months they did in December 2016, they did 10 times what they did back then just in product sales. In one quarter versus a whole year back then, guys. Absolutely incredible the way Amazon's come around. Now look at where the profitability is starting to go, and look at where the GAAP earnings are starting to improve. They did $596 million in net income in 2015. This past year, they did $2.37 billion in net income. So the net income is going up drastically. The profits are really starting to roll in Amazon. And then we look at the balance sheet. Look at how much their balance sheets improved from back then. Now they have $19 billion in cash. Now they have $6.6 billion in marketable securities, basically investments. Now they have long-term debt of only $7 billion. So Amazon's business has just completely transformed. They've just become the Goliath. They're just owning the entire space. And what do I mainly attribute the Amazon success? I really attribute it to two things, right? Selection and price. Selection and price. Amazon became the retailer that had by far the biggest selection out of anybody out there, and it's not even remotely close. They also became the price dominant retailer, the one that had the lowest prices on the biggest amount of things. They basically did what Walmart did in the 50s, 60s, 70s, 80s. They basically did what Walmart did in the physical space, and they took it to online. That's exactly what they did. Walmart said, okay, you know what we're going to do? We're going to build the biggest stores. We're going to have the biggest amount of selection on things. And people would go to Walmart, and it was like, when I was growing up as a kid, it was like, oh, you need something, go to Walmart because Walmart's going to have it no matter what. That was like the saying back then, Walmart's going to have whatever you're looking for, and they're probably going to have the lowest price. So Walmart wanted to beat everybody on price. They wanted to beat everybody with selection, right? Amazon came around and they said, okay, we're going to beat you on price, and then we're going to have 20 times more selection. 100 times more selection of certain things, guys. Way more selection across the board on Amazon than anybody else had out there. Any type of major retailer. That's exactly what Amazon did. It's exactly what Amazon won. And Walmart simply did not adjust fast enough. Now, Walmart's trying to adjust still to this day. They're trying to do some things. Maybe they can survive in the long term. Who knows? Maybe they'll be a relevant company 10 years from now. It's hard to really know, but It's going to depend on, they need to get their ass moving over the next few years, but they should have been focused back in early 2000 on really building that online business. The problem Walmart had is they didn't really want it to be successful online. They didn't really know if it was going to be successful. They already had something that was making them so much money. They already had their focus, which was physical retail stores. They already had their focus. They didn't really want this other way to succeed. Want that. So it took them such a long time. And Walmart didn't start taking online seriously really till, literally in my opinion, Walmart did not start taking online seriously till this past year. That's how long it's taken them. 15, 20 years behind the ball as far as really building it out the way they should have been, the focus on those kinds of things, guys. And to that, Walmart might be their demise, but a lot of other retailers are already done. Like a lot of other retailers, simply because of Amazon, like they're already finished. They're already ended. Like their game is over at this point. They already went bankrupt or they're about to go bankrupt, some of those kinds of things, guys. And most of it is honestly because of Amazon and the way they completely changed the space. And now they take $135 billion a year that used to be in all these other physical retailers that used to be all their money. Amazon gets that money now. Amazon gets that money, guys. So, and I don't see it stopping anytime soon. I hope you guys enjoyed this today. A little look back at Amazon when it was $8 stock versus now being an $894 stock. I hope you enjoyed this today. Leave that thumbs up button if you enjoyed. Leave me any comments if you have any other theories on why Amazon succeeded other than what I said. Let me just know in that comment section. Let me know if there's any other stocks you would like me to look back at, you know, from the early 2000s or something, stocks that might have gone up so much, and we can look back in time and kind of see why that stock succeeded so much over the years and why it grew into a beast. If you want to see anything like that, leave it in the comment section. Leave a particular stock. If you just came across this channel, you may want to subscribe. We talk personal finance. We talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk the stock market, the most of everything, just like we did today. Thank you for watching, guys, and have a great day. Let's find the next Amazon stock.